What is going on, ladies and gentlemen? Welcome back to the Daily Stack Report. Today we're going to be going over what exactly happened this week. It was not calm. We saw sharp rallies, violent pullbacks, key technical levels break, and some resistance, and some serious macro headlines that moved the market. But first, if you stack physical, silver, or gold, this recap is what you need. Make sure you hit that subscribe button because at 100 subscribers, we are giving away this beautiful 1996 American Silver Eagle. Hit the subscribe, hit the like, and let's get into this. So right now, we can see where we hit this trend line. We kind of bounced around it today. We're at Kitco right now. And here we go, back to the action. So we can see this trend line and where we bounced around it today. Kind of broke through that $78 mark, bounced off 74, and we just kind of teeter-tottered going around 77.30 is where we ended right now. The 78 is going to serve as a key technical line going forward, so I'm looking at this going into next week. It should end, end of week is when I expect it to end, but if there's anything that we've seen is that these tend to break a couple days early. This one broke to the upside, then we broke back down. We had that huge fall right there. So I'm going to be watching this $80 mark, see how we hit it. 83, see if we can bounce off that. But first we have to get past 78. We have to start small. Let's go into our AppMex. What do they have right now? We have 78.14. Their Silver Eagles are 92.13, so that is a round of $14 premium. It's not bad. It's actually probably the lowest it's been. Amex is usually a little bit more on the expensive side, so I do like seeing that. Let's see, 1 ounce 91. That's only about a $13 premium. Guys, earlier in the week and last week, these premiums were around $15 to $25. So seeing those premiums kind of come down a little bit, it's the main reason why I personally like the Silver Eagles more than any other type of silver. Yes, silver is silver, but if there's anything we've learned through these dramatic rises and drops is that the Silver Eagles have held their premiums the best on both on the sell side and the buy side. So that's currently why I am sticking to the Silver Eagles. Guys, gold started this week strong, but we ran into some major resistance around 5,000. Now we did close above 5,000, so that is big. A couple takeaways is that a stronger labor market equals fewer near-term rate cuts. Higher rate expectations equals stronger dollar, and a stronger dollar equals pressure on gold. So definitely going to be checking for that next week if we can stay above 5,000 or see how that we test that $5,000 mark. Silver, guys, we saw major trend lines break, large volume spikes, and algorithmic selling. It was a very calm day today, and so it is a good thing. We do need these consolidation pieces, but hopefully we can start breaking back to the upside going next week. Macro drivers that I saw this week were labor data, stronger than expected payroll numbers, shifted rate cut expectations. Mining.com reported that gold dropped over 3% on the data beat, reinforcing the higher for longer narrative. Markets repriced Fed expectations quickly. The dollar strength, and when the dollar rises, which it did this week, metals become more expensive globally, international demand cools, and speculators reduce exposure. Now, the third thing was stop sell cascades. Once gold broke below 5,000, automated systems triggered. This is critical for viewers to understand because when key psychological levels break, it stops triggers, liquidity dries up, and price accelerates on the downside. This is just a market structure thing. It's not necessarily a public sentiment. So going into next week, I want to see if silver can break 80 and hold above 80, and I want to see if gold can hold above $5,000. That would be a very bullish thing going into the last week of February and then going into March. I'm also going to be watching the CPI data and the inflation read. And yeah, I want to see where the dollar direction goes. and just kind of see how the total market reprices this. And I would like to see a calm week. If we hung around that $75 to $78 mark, 75 to 80, like that little range right there, that would be very bullish going towards March, because March is the month where people can demand their metals get delivered. So to close, this week wasn't about panic. It was about repricing. Stronger labor data shifted rate expectations. Technical levels broke, triggered stop losses, which triggered more selling pressure. But the long-term thesis hasn't changed, guys. We are still bullish on silver. We're still bullish on gold. These are the precious metals market, and we have to make sure that we are treating it as such and not as a meme coin, guys. So as always, stack smart, stay safe, and I will see you next week.